What is going on, everybody? Welcome into another edition of the Daily Energy Newsbeat Stand-Up here on this gorgeous Wednesday, January 4th, 2023. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsbeat.com, Stuart Turley. My man, how we doing today?
Oh, it's a beautiful day in the neighborhood. And I'll tell you what, I've had an absolute blast talking to customers and working on the news stories. It is an absolute beautiful day.
No, it has been a busy start to the new year, but that's exactly how we like it. It's been a busy news cycle, Stu. You have some absolutely great articles to cover. We're going to start here locally and talk about oil majors, Exxon and Chevron shifting focus specifically to the Americas. We see that in their 2023 budgets. It'll be very interesting. Stu will cover where they're looking to spend their dollars. Then we'll look at why we will then look at Russia's invasion of Ukraine and talk about why, as it nears its end, so will the oil market crisis that is sparked by it. But Stu, as Stu will point out, this was by a very interesting author, so I think he'll have some words to cover on why this invasion might necessarily be over in terms of oil prices. But again, Stu will cover that. 2022 will be remembered as the year the U.S. became the world's largest exporter of liquefied natural gas. Got to love it. But what does that mean going forward? We will cover that. Also, China announced today a huge gas deal with Qatar, which gives it unprecedented control over its energy. I'm not even going to spoil how long the supply agreement is. I'm going to let Stu do that. And then finally, guys, the first tanker carrying LNG from the United States arrives in Germany. We will have our reaction and cover what that means for the markets going forward. I will step in and, again, unfortunately, cover an absolute nosedive in natural gas prices. And really, there's a great Twitter thread by somebody I follow very closely, Jamie Hurd, who will cover his thoughts on that. Oil prices do tumble to 77.19, so we'll cover all that. We also have some two interesting news here. Talos announces some very nice offshore deep water discoveries. They've got some initial flowback results. We'll cover what that means. And then also BP getting into the M&A game, but not what you think. Buying a U.S. biogas company in order to reduce carbon intensity. We will cover all of that and a bag of chips, guys. But first, check us out online at the world's greatest website, www.energynewsbeat.com, the best place for all of your energy news. You can have news, data, all in one, because we actually are just announcing dashboard.energynewsbeat.com. It's our free open source dashboard where you can go check out all of the news and all of the data associated with the stuff that we talk about on the show. Check it out. Dashboard.energynewsbeat.com, and it's a part of the world's greatest website, energynewsbeat.com. So super excited about the dashboard, Stu. It's been a long time coming, and tomorrow I think will be a great day to give everybody a little bit of live demo if you watch on the YouTube, because we'll see an update for the EIA numbers, and we'll make sure to put a little screenshot in there. But check it out, www.dashboard.energynewsbeat.com.
Boy, that sounds great, dude. Teams worked real hard on that. And I like having a one-stop shop, one pane of glass for data. And I know this is Rev 1. We got it's not where we want it, but
there's a lot of work left. But hey, we're pushing out what we've got. Enough of the pleasantries, though, Stu. Where would you like to begin?
We're going to the first one with this pretty interesting article. The oil market crisis sparked by Russia's invasion is nearing its end. We know that President Biden called this the Putin price hike around the world, and it triggered a major oil market crisis. Oil and gas prices soared to multi-decade highs. Coal prices grew nearly 70%. Global wheat prices increased over 60%. Prices of metal exported by Russia, nickel, palladium, aluminum, all increased. Okay. There are growing signs that this will end and all things will be good. All right. Here's a quote out of it. In a large part, oil prices have declined in recent months due to recessionary fears and increasing interest rates in many developed economies. A worsening in the situation of Ukraine could also provide bearish signals for the market as a result of global economic slowdown. Okay, here's where they come in with a fallacy on this one, Michael. And it's not going to end. The oil market crisis spark is nearing an end. No, the oil crisis was coming for about 5 years. And that's a Texas way to say it there, Michael, it was coming along for 10 years, 5 years. And that is because of the energy policies around the world. We're not done yet with this. And so the oil market crisis, yes, there is going to be volatility a little bit if Russia ends it, but we have China trying to look at Taiwan. We have about 4 or 5 other major issues going on. Oil price is not over with, Michael.
No. I agree with you. Again, we were in a high oil price environment before Russia's invasion of Ukraine. To blame it all on Russia's invasion of Ukraine for why we're in this oil price situation is asinine, because we were already there. It took $85 oil and pushed it to 100. So the fact that we're at 77 now is still lower than what it would have been without the invasion. So there's a lot of other markets at play right now. And I think when you go, again, I agree with some of what this article says, but I think the bigger picture is, yes, we're probably pricing out Russia because the market is realizing that the barrels are still going places and everything is still in balance. And maybe 75 to 85 is really the market being in balance. It's going to be very interesting to see how companies in 2023 respond to that. But I think they're missing the fact. I think they're just missing that fact.
Here's a big one that I believe it was yesterday, that India and Russia have signed a deal to trade in Russian currency for the euros. So the Russian Ural oil. And so all of a sudden that's going to be pulled out of the market that OPEC is in charge of. So that is a gigantic thing. And so you're going to see decreases in OPEC production to match for that.
Yeah, absolutely. What do you got next?
Okay, coming around the corner here. 2022 will be remembered as the year the U.S. became the world's largest exporter of LNG. I really like the way this title comes around, and this article has a lot of good things in it. And Josh Axelrod, Michael, brings out some great points here. He's the senior advocate in the nature program at the National Resource Defense Council. Boy, that's a pretty nice little title there. It says it's all about the industry staking a claim to future role. He also says there's no growth opportunity for oil in the U.S. market. So securing export destinations and capacity is one of their many tactics to stay active and growing as the climate change gets worse. This is pointing out that climate change, let's leave off of the table here as a discussion, because we know what my opinion is there. These communities don't need this anymore, said Rosetta Ozane, a community organizer for Southwest Louisiana and Texas Healthy Gulf, an environmental group. So you can see where this article was written was an environmental group. And even though they started out and say, hey, we became the greatest, it was actually earlier on when President Trump was in. So anyway, this article is a trending story of things that are coming along, and people are saying, Michael, that oil and gas is dead. Long live oil and gas, long live renewables. And we still need oil and gas in order to get to carbon neutral, in order to get there. But I'm seeing 15, 10 stories, 20 stories, and they're all saying this is the year oil and gas is dead. And I'm like, Have you figured out yet the problem? Anyway,
I mean, I do think we will head more towards a natural gas fueled infrastructure, if only
yes,
because it's the cleanest. There's an abundant resources. People, yes, I think there's as you mentioned, there's a role for renewables, but I think at the actual infrastructure level, like, I mean, people are going to make decisions based on economics and not necessarily based on climate goals. Now but I think they'll realize, as was pointed out by you in COP26, natural gas is becoming a green fuel. So I think, that's in my opinion, that's the next sleight of hand that we'll see is all of a sudden natural gas will be carbon free or carbon neutral if done safely, which it can be. So, but that's the sleight of hand that's coming.
Yeah, I was talking about that a long time ago and saying, hey, nobody else noticed this.
Pat yourself on the back. Let's move on to the next story. What do we got?
Okay, it was only the second time I've been right, dude. So, I mean, actually the first time. Okay, moving right along. This is really huge news. And when you talk about this, the title of the article is First Tanker Carrying LNG from US Arrives in Germany. This is really, really good. I mean, when you sit back and talk about Germany now has an LNG tanker coming in. The tanker Maria Energy arrived at the North Sea port of, I'm not even going to try to say it, what do you call that? Welvensen.
Yeah,
I'm not gonna anymore. Yeah, it's something like that. Wilhelm.
Wilhelmshaven. That's what it looks like. Wilhelmshaven. I'm pretty sure that's what it is.
Yeah, bless you. Where its shipment of LNG will be converted back into gas at the terminal that was just brought in last month. I believe it was 10 months that it took them to get that in place. And that's fast for a regasification plant to come in. That's really fast.
That is.
So anyway, my hat's off to them. And you notice that that's going along with the other story that we had. Coming along with the natural gas deal, and I'm going to just take 1 second. The reason the EU got into a lot of problems right now is because they went with a short-term contract. They got rid of all their long-term contracts, and it played into Putin's hands, and he won that chess match. The next article coming around the corner shows that China learned from Russia, learned from the EU. So did Qatar. China's gas deal with Qatar gives it unprecedented control over energy. Michael, this story is not just a story of a contract. It's a story of a geopolitical story that they are now signing. Michael, are you ready for this? A 27-year contract for LNG with China's Sinopec. Guess who owns who's on the board that? I believe that is Mr. Hunter.
I was going to say Hunter Biden.
Hunter Biden. So he's very much aware of this. And Qatar Energy will provide the shipping and delivering of the LNG. The contract had a little twist on it, and that is it is delivered at China for the certain price that's in the contract, includes transportation costs. I'd love to see that contract in there because transportation costs can change. But what this does is it is going under a new insurance item. It's coming under a new insurance item, which we had talked about. That's why sanctions won't get it. Does that make sense?
Yeah, I mean, you've always aptly pointed out sanctions don't work. I mean, a 27-year agreement, that's insane. It was only a matter of time really before the world's largest LNG exporter, Qatar, and the world's largest importer of LNG, China, hooked up. So I can't say I'm necessarily shocked at this deal, but well,
the U.S.
deals that's good for both parties. What does it say about the future of the energy? That's up for discussion.
I would agree, but that wasn't me that put that in there. I'm not gonna blame
What's
anybody.
next?
Okay. this is an interesting article, and it's about lowering your costs and giving back your money. The title of the article is Oil Majors Exxon and Chevron Shift Focus to the Americas. That actually is they shift to the Western areas. They're leaving Africa, they're leaving other areas. And Michael, this is part of because it was from the ESG movement has caused them to continue to seek and give money back. The article comes in and says, in its corporate plan through 2027, Exxon says that its investments were expected to be in the range of 23 billion to 25 billion to help in the CapEx spending. 70% of that will be in the U.S. Permian. Wow. So they're going to leave a bunch of their investments out of the rest of the world, and that is due to constraint of supply chain. It's in the constraint of labor dollars, and it's a lot easier to control your costs in the U.S. market than it is in those other areas. It is really, really bad for those areas in Africa and the ones that they're leaving. It's pretty bad for them.
Yeah,
Chevron, however, is also going to bet on it. And Michael, out of organic CapEx 14 billion, it includes more than 4 billion for the Permian Basin and 2 billion for other shale and light assets. So you can see that the white striped ape in the Permian is going to be Exxon. I mean, they're going to be they're going to be drilling big in the Permian. Now, Chevron has got a tanker going down to Venezuela, and this is a follow-on to last week, Michael. They are only picking up oil from, and that was an article that was released yesterday. They are only picking up oil from Venezuela in already operating fields. They're doing no investment in CapEx. So Chevron is not investing in anything in Venezuela because
I think 2 weeks ago we covered the breakdown of the amount of money it's going to cost to actually bring some new production online. It ain't cheap, folks.
No, and it was 10 years or ROI that they were talking. So hats off to the management.
Yeah, I think it's really interesting. I love being able to give a guidance of, in the range of 23 to 25 billion CapEx spending for Exxon, like nice little $2 billion buffer. Like we'll get there one day, Stu. We'll get there one day.
Oh, that's great. But that's the way our politicians work right now, Michael. What's a few trillion between friends?
Yikes. I do think it's interesting though. ExxonMobil does come out and say that they have 90% of their investments that they've forecasted to drill in 2023 are economic at 10% IRRs at a $35 oil price. So you're telling me 90% they've got, and this is where IR guy of the week, whoever came up with that phrase, IR guy of the week. I will put $100 on the table right now. I don't have it, but I'd put it on the table and say, there is no way that ends up becoming true, because you don't know. I mean, that's what you forecast, but I would bet you all the money in my bank account that would not be true. So check back in a year. That I guarantee you is, because if that was true, why didn't you drill them last year? Why did you drill them 2 years ago?
See, even Saudis are under $1, under $3, in order to get, I've even heard 30 cents. Nobody really knows what their true costs are.
Yeah, they'll throw anything. What I'm saying is it's not 35. It's probably 60. But that's okay. It's okay. It's just, I want to meet
IR guy of the week. I love
IR guy of the week, because they're probably drilling 400 wells. So you're telling me 360.
We can't give out the IR guy of the week. We have to put him in runner up. I mean, we're going to have to stack them up. We will. We can't pick them on Wednesdays.
We will. Do you have anything else?
No, it's all off to you, dude.
Yeah, unfortunately, I was just trying to push off the finance section as long as we can. We're still dealing with nat gas prices. I mean, as we sit here on the third, about 6:45, natural gas is trading at $4 on the nose. And again, these, with the amount of natural gas that we've produced and with the way the markets are shaping, I mean, I think we've definitely entered bearish territory with the weather projected to be a lot warmer and a much more of a mild winter. Pretty much all of the short and long-term fundamentals have really switched on us. And it's going to be very interesting to see what happens specifically with the number of gas rigs running right now. You have a lot of companies that are lining up rigs specifically to run through natural gas fields. Is that something they want to do with the $2-3 handle, maybe around the corner for the futures curve? So I think, again, it's going to be very interesting to see where nat gas prices go. I'm a big fan of this guy, Jamie Hurd. He's on one of my favorite Twitter follows. I think he had a great thread today. I thought, and I just felt like reading it. So one, he says, nat gas thoughts. Why Henry Hub was $6. Now it's $3.90. What gives? First one, I hate it, but weather. It's warm, especially in places where people live, Texas and New England, and even Europe. Two, we got a freeze off, and it was in the least helpful place, Appalachia. Freeze offs are in oversupplied constraint regions, don't really help because the deficit created is easily refilled by the summer. The third, the map is still not doling out this drop equally. Henry Hub is down a bunch, but Pacific Northwest still looks very strong in 2023. PG&E is over $7, mainland over $5, and recent cash pricing in these regions have remained in the teens. Basis between Western production markets and Henry Hub has leaped in. What's next? What's next near term? Technically, we're due for some sort of a bounce. It's still only January 3rd, 2 more months of potential drama, but stock out risk is now minimal. East versus West pricing dynamics should be sticky for 2023, aka higher pricing in the West. So what's next for the midterm? I think we dropped tier 2, tier 3 drilling in Texas, Mid-Con Rockies. Forwards are pointing to this is where I got a $2-3 gas in these areas with inflation baked in. 3 is the new 2. We should drop some of these gas dedicated rigs. Also midterm productivity degradation. I think it's important for a theme for 2023 for oil and gas. We saw a lot of basin inflect lower in 2022 and some in 2023 or some in 2021, and 2023 should continue the parade lower of lower type curves for the same capital. The resource grab is upon us. That's a lot, but I think he succinks it very nicely. I mean, the fundamentals have switched a little bit. We're definitely not going to draw as much gas as we need with this amount of warm weather coming around the corner. It's going to be very interesting to see what happens going forward. And I say that if only because I swung and missed at this one. So sign me up for the Goldman Sachs interview.
Well, let me ask you this one. With coal prices at some of the highest they've been in a long time, the demand for coal around the world is going up. Do you think that there'll be more of a push and supply will be used by natural gas around the US instead of coal, and that could impact it? It might take months, so it'd take a little longer. I'm just asking.
Yeah, I mean, I think replacing things that people have been switching to coal are now going to be thinking twice about trying to switch back to natural gas. The problem is it's an infrastructure problem. So as I meant, how quickly can you make that transition back? I don't know how quick, if you're in the middle of drilling a gas well right now, you just gotta hope it happens. So there's not much you can do about it. Your well's drilled, it's in flowback. Yeah. So
run away.
Exactly. Now let's go to prices. But
okay.
So that's how I would look at it. But yeah, I mean, and the crude oil side, there ain't much thing nicer. We're trading at 77.05. Obviously it's the broader recessionary fears that I think are dragging oil prices down, at least from where they were at about $81 when we checked in earlier today. We opened at about 80, 85, went all the way up to 81 by about or last night, I should say, and then rolled over into this morning session and had a pretty big tank down. So I think crude oil prices, it's anybody's game. The overall economy, we lost about 0.4 of a percentage point off the S&P 500, about 0.7 off the NASDAQ. It's more of the same here in 2023, unfortunately. So we're hoping we can swing out of this little winter swoon and get back to it. But That's all I've got, Stu. You got anything else for us?
No, it's going to be a great day tomorrow.
Yes, it will, guys. So with that, we're going to let you get out of here. Start your day. Thanks for checking us out on the world's greatest podcast, the Daily Energy News Beat. Stand up for Stuart Turley. I'm Michael Tanner. See you tomorrow.